Greetings everybody, Sive Morten is here with the ForexPeaceArmy.com. Let's keep going with our analysis of the euro currency. So, as usual, we have prepared weekly report, fundamental background for euro currency, where we have considered not just recent data that had been released, but also have tried to identify the major risk for a current upside tendency on euro. The reason why we decided to do this is just because if you take a look at the monthly chart, those our farmers who are following us for a long time must remember that actually on the monthly chart we have the patterns such as a big hand shoulders, reverse hand shoulders, or big the guard is cheaper to sell, both suggest possible retracement to the 110 area. So, and that actually was the reason we have tried to understand why actually this might happen. Because this retracement, if even it will happen, it will not break the big upside tendency, but still it might be really sensible impact on the trading process. And one of the reasons that we have identified, which is actually might be, and which actually we treat as a major risk factor based on the fundamental background that we see in Europe, it's a possible rate cut from the European Central Bank, not in September, but until the end of the year. That might be the reasons. Besides, this risk might be not just one side, but it might be two sides. So, for instance, if we still will get the impact on the inflation in the United States, and Fed will stop its dovish program. So it will cut in September, but then they could take the pause, and that might make impact on euro currency. So if you're interested why we think so, and actually in what moment this particular might make impact on the market, you could read this in report. Also, it's usually there's lots of different important information that could let you to understand better what's going on in domestic finances in the United States and in European background as well. So speaking about technical picture, yes, I will put the link to the report down below in the description of this video. So speaking about the technical picture and what we're gonna do in the next week, so we're still aimed on a possible upward action, and we remain focused on a possible taking out of this top in the beginning of the week. So in general, we have the bullish tendency, we have bullish trend, and on Friday, if you take a look on the daily chart or on the futures chart, the euro currency and Chicago Mercantile Exchange, you could see that we've got the bullish grabber. The minimum target of this pattern is at this top. Since on Monday we will get the United States holiday, euro currency will be the thin market, and it could just keep drifting with the momentum that exists for now. The distance to the target stands relatively small, it's not really big, less than 100 pips. So I will not be surprised if on Monday, Tuesday we will get this possible attempt taken out of this top. The more interesting is that what will happen next, whether this target will be achieved just some kind of the wash and rinse of the top, grabbing stops and collapse, market return and big down, because don't forget that nominal trend on the weekly chart remains bearish. So although overall price action is not quite bearish, but still nominal direction is bearish. And here's maybe surprises, something like this, right? Although it was the Cook story, but actually it's also maybe some surprises. For example, you know what will happen in France. It will be a very important week for the European Union next week. So that will be the primary focus, what the breakout, what the attempt of taking out of this top will be. But first, we're aiming on the reaching of this level. That's what we're going to do on Monday. On the 4 time frame chart, currently, if you have missed all opportunities for entry that we already discussed in the last 2 weeks, and you have missed entry on Friday, yesterday, let's also talk about this with regard to triple to buy pattern. This works really great. Here is another chance for you, and it will be relatively simple, because you should focus only on the most recent upward candle. We're relying on the grabber that we have here, and the lows of this pattern is an validation point, which is actually on the 4 time frame chart stands right here. Bullish divergence here stands as well. It suggests the same target taken out of this top. So all that we need to do, if you would like to take a long position, you just need to wait and just focus on the support levels that stands here on the hourly chart and make the decision on the potential entry. This is very simple step. If you take a look at the hourly chart, that what we've got on Friday. It's this pattern that we discussed. It's worked really nice. Now, and you can see market stands in retracement, and it's in fact it stands already in a point when you could make the decision. This is a confidence support. Actually, you have only two levels to consider position taking. First is right here, 1672, 1677, or level down below 1656, 1658. This is confluence. But you can see in this case, market mostly will erase totally the previous upper direction, which is not good. That's why this level is probably most suitable for stop hiding. Of course, you could just place your stop just below the confluence, but probably it would be better to place it right below the lows of the grabber, just for purity. So you'll be under protection of the confluence support and low support as well. So as you can see, it's actually very simple stop that we have. We have, speaking about targets, we have lots of different extensions to the upside, but I think that we have to focus on the nearest standing one first, which is actually XOP target of our hand shoulders pattern. You can see market responses to the targets of this pattern are really accurate. You can see that OP just has been reached, market turns the retracement. XOP will be 1757, 1758. So if you take a look at the daily chart or 4-time chart, 1758 is just 10 pips above the top. Absolutely normal target, especially if we suggest some stop grabbing above it. This market will be just spiking up a bit, so I think that's a reasonable target. So that's actually all that we could say currently. Trading plan is ready. You have a time Sunday, Monday morning to decide whether to deal with it or not. Just make your own decision. Maybe it will just help you to prepare your own trading plan. That will be just great. So probably that's all for now. See you next time.